the lowest rate's not always going to win. Are you
Absolutely.
are you decent human being to work with? Are you reasonable? Are you going to do what you say what you're going to do and not retrade me? And all these things that I've experienced throughout my career, that is worth 50 bips, 25. I mean, I can't tell you how many times we've executed in the last year with lenders that we know are going to be there.
Good morning, good afternoon, and good evening. My name is Drew Pearson. You are listening to the Pearson Perspective. This is a deep dive into the stories and mindsets of successful business operators and investors. Let's go have some fun. All right, today I've got my good buddy Jack McLarty on the show. He is the Managing Director of Capital Markets at First National Realty Partners, based out of LA. Jack and I have known each other for probably 15 years ago when he worked in the small town of Baton Rouge.
That's right.
For a good bank down there. And Jack's gone on to do big and wonderful things across the country. Jack, thanks so much for coming on the show today.
Oh, thanks for having me. It's great to be here, and you're right. It's been a long journey, and I'm equally as impressed to see where you've gone. So really looking forward to doing this today.
Thanks, man. And so for a long time, I didn't know what capital markets was. So can you just kind of explain to lay people what do you do and what customers do you serve? Because for the most part, I don't think people know exactly what you do.
Good. I've always heard the old adage, if you have to say more than 2 or 3 words to describe what it is, what you do for a living, you're probably lying or full of it. Capital markets, it's a fancy way. So there's two separate, verticals. There's equity capital markets and debt capital markets. And I would say for the majority of my career, the debt capital markets is where I've focused, which really it's the lending world, right? It's debt, to put it bluntly. In my role, I pull on various lending roles that I've had throughout my career and various cities and financial institutions to originate loans for all of FNRP's acquisitions. I'm also very active on the capitalization front as well, working with investors, more so on the institutional side on fundraising. So debt isn't all created equally. It's not, the most prominent, is first mortgage financing that everyone either has on their personal home or, most investors or owner operators will utilize in a commercial loan, right? Nothing sexy, just a very, traditional execution. And then, on top of that, there's other, tranches that I'll originate on behalf of FNRP and some of our other partners, whether it be mezz or pref equity or, B notes and CMBS and all these fun things that, really, throughout the spectrum kind of make up the debt capital markets. And certainly that's just in the real estate purview. There's all different kinds of, exotic, debt structures that, if you opened up a 10K, that you might find within any, Fortune 500 that, is a brand name in your house. So it really does run the gamut, but for the most part, it is the capital that makes up the capital stack in any one particular investment. And, again, there's always some mix of debt and equity.
Mm-hmm. All right, so let's talk about one more term, and then we'll get into kind of your career. Capital stack. This word confused me for a very long time. I'm talking about like maybe a year or two ago, I wasn't sure what this word meant. Can you just like break down the cap stack or capital stack for our listeners?
Sure. So the capital stack is, again, let's focus on real estate, right? Because that's what you and I, hold dear. It's every dollar that makes up the acquisition at a high level of a property, right? So let's just say you're buying a piece of property for $1 million. You've got a $600,000 loan. You got $400,000 of equity. That is your capital stack, to put it plainly. Yeah. Got
it. Okay. Well, good. So we're learning all kinds of stuff today.
Yeah.
All right, Jack. So man, we met after college in Baton Rouge. You worked for a great little bank down there, Citizens, who I still bank with.
That's
They're
right.
Great folks over there. And you've really you've gone from Chicago, New York, LA. Kind of walk us through your career and what's been kind of the driver for learning all about the debt world.
Yeah, well, I think I think sometimes, and I'll reference this many times, not in just this conversation, but throughout my career. Um, Sometimes it's better to be lucky than good. Um, as you did, you took a left turn. You didn't quite finish at Ole Miss. You had to turn to the dark side and go to LSU. Which, for anybody listening, he was very gracious in the beatdown that we received this past weekend in Tiger Stadium. But I digress.
Mm-hmm.
I just happened to. I was living in Baton Rouge at the time, and this is post college, shortly post college, and went to an event that Citizens, which to your point is a phenomenal bank that has been serving the Plaquemine and Baton Rouge and just general Louisiana markets for many years. The Middleton family is incredibly gracious and were incredible people to work for, and I was at one of their fundraisers. I think it was their largest one. I think they still put it on every year, and I was there and happened to meet what was going to be my future boss, Jim Ferguson, who you and I both gone fishing and hunting with on numerous occasions, and that's where it started. We crossed paths, we hit it off. I interviewed a couple of months later, and I started working for a small community bank in South Louisiana that was not really something that was on my radar, and is literally what provided the catalyst to get me interested in commercial real estate. Because as you know Jim and the firm itself had already made kind of a commitment to focusing on commercial real estate and being good at it and understanding it,
Mm-hmm.
and the education that's brought in, not just with education but also the networking that's brought in with CCIM, and getting me involved with that. And frankly, I even though that is a very small community bank um, that doesn't have a very large footprint, it really opened my eyes, not just to commercial real estate, but frankly to kind of the larger world, and really, I guess, was a shot in the arm to really get my career in gear. And I frankly have it all to owe, Jim Ferguson, who's now
Old
still, I
Ferguson.
know, old Perg. I hope he hears this. Who
Oh, I'm sending it to him. Don't
there
worry.
you go. But I mean, and it's true, and I probably don't tell him enough. He's now still the chief lending officer of the bank. If you're doing business in Baton Rouge and don't know his name, you're probably not doing enough business, because the guy is super well connected and phenomenal at what he does. And then led, previously by Ed Middleton, who, his family, I'll never, this is something he told me my first day. I went down to Plaquemine, the old Plaquemine, office that, has got, sugarcane leaves in the streets almost every day when you drive into the branch. But we sat down in his nice big office, and he goes, I don't really have much to tell you. Just, you know, you do what you say you're going to do it, when you're going to do it, and for how much. If you follow those kind of general principles in anything that you do in your personal or business life, you'll be all right. And it's pretty simple, but very wise, because I think it's very easy these days to overpromise, underdeliver, and tell people what they want to hear just to get your way or whatever it might be. And again, that very simple interaction with him, which was probably 2 minutes, has really stayed with me, and something that I think has been very useful, and just kind of how I approach things.
Wow, that's awesome. That last part that you said, for the price you said you were going to do it at, is really important.
Hmm.
Sometimes you got to take it on the chin. Sometimes you got to take a little loss, but it's worth it to build these relationships, to build that trust. That's great advice.
Yeah, I agree, and especially in this kind of transactional environment we find ourselves in these days, you only get one shot, and your name's kind of everything. So, I'm not perfect. That's not what I'm claiming to be, but I think if you use that as a guiding principle, you really can't go wrong. At least try to do right by folks, and that's kind of my small town mentality. Even though, as you mentioned, I have been in the places like Chicago, New York, and currently in Los Angeles. You definitely don't see a lot of that in those places, unfortunately, and I think it's been a benefit, frankly, to my career, because I think a lot of that's lost on kind of the go transactional nature of a lot of relationships, and you know anything that you can differentiate yourself besides just being that Southern guy out of water, the
Yeah.
better.
Yeah. Well, I remember you were in Chicago for a bit. I don't remember why. I was in town. I stayed with you. on one night up there. That was the first time I'd ever had Hendrick's gin. You were like, "Oh, you got to have this gin and tonic," and I was like, "Oh man, this stuff is pretty good."
Yeah, yeah.
So take us through your kind of your travels from Chicago to New York, and then kind of how you end up in LA, and maybe have there been differences in those shops? Have it all been kind of the same type work environment? Walk us through that.
Yeah, yeah. So, kind of take a step back, again, really didn't have the love and certainly commitment to commercial real estate and certainly the finance side until again I had been with Citizens for a couple of years. Did well there. So to take a step back, really really did had a great few years with Citizens. Learned an immense amount. Again to the credit of Jim and everybody at Citizens, and was able to get recruited away from Citizens into a role at JP Morgan, which is certainly a much more, certainly a larger bank, but one that came with a lot of, I guess, opportunity that I feel like I was really ready for. Larger loan transactions, larger clients, larger footprint, being exposed on a more national level to some of the, I guess, the more well-known credit training that they have. Really just trying to constantly better myself, make myself more hireable. And it was, I think, in
Hmm.
that moment where I really started seeing, like, hey, there's a big world out there, and I want to see it. And if I want to do that, I've got to kind of fly the nest. Not that the South is, you know, no judgment, no issue whatsoever of my time growing up in the South. That's certainly where my roots still are today. But for me to be exposed to a few of the industries and certainly more sophisticated transactions, or certainly more complicated transactions that I was really interested in learning more about and being a part of. There's only a handful of places in the world where you can do that, and given my background and success that I'd had previously, I was actually contacted by a recruiter from Bank of China, which at the time, that was, if you recall, 2014. Um, Chinese inbound investment was insane. It was pretty much all you heard of. At the time, there wasn't even a Bank of China location in the Midwest. This was to build out their entire commercial real estate and corporate banking portfolio. And after about 4 months of interviews, I was hired and moved to Chicago, which, at the time, I didn't realize it, but that was really my first, true success story of, hey, keeping your head down, working through, all these goals that you've set for yourself. It's really starting to pay off a little bit because, I mean, look, now I was one of two Americans in an office of 20, one of two native speakers.
Wow.
We had almost no outstandings on our loan book. We covered the entire Midwest, plus Colorado, strangely enough. And we really just kind of answered to our New York office. But at the end of the day, we went from, call it, zero in outstandings to about 2 billion in originations in less than about a year and a half. And that was a mix of kind of corporate debt and commercial real estate, doing large trophy. I think the first deal I ever did, if anyone is familiar with the Aon building in Chicago, it's right on Grant Park, overlooking the lake, kind of in the northern part of the loop in Chicago. That was a $900 million acquisition. I think our first note debt on that was around 400 something million, and we had some mezz and secondary debt provided by Blackstone and Principal uh, Financial. So big names,
Big time
big
stuff. Yeah.
numbers. Again, much bigger than anything I had ever seen before. So, again, when we closed that deal, you take a step back and you're thinking, okay, this is exactly why I'm here. I'm being exposed to the things I am, these are goals again that I had set out for myself. I'm making it happen. And that was a very rewarding part of my life, and really just further, I guess, confirmed my, you know, thesis of, like, this is these are the things I need to do. And if you work hard enough, with a little bit of luck, and I'll swear up and down, I am certainly luckier than most. I know my constraints, but at the same time, it was a really rewarding experience. And frankly, something that continued to pave the way to, or at least was my first foray into what my wife refers to me as like the United Nations of banking. Because from there, I moved to New York with my wife. She works in finance as well, on the communications side, and found my way once I was in New York, staying primarily focused in real estate, but now working for an Israeli bank uh, based in New York, and covering a little bit smaller transactions, but still, 30 to 60 million dollar, traditionally, or typically rather, um, acquisitions for folks that were either based in Israel or had some connection to Israel, but we're doing business in the United States, and that would pretty much covered all of the Eastern Seaboard, and mostly New York and Miami. So again, another rewarding experience, being brought on to manage a large group of people that I'd really never had the opportunity to do before, and it really allowed me to then move from New York to LA. Where my wife's family is originally from. They're originally from Newport, so we figured we wanted to put some roots down and a little bit closer to family. And I was able to stay with the Israeli bank that I was working with previously. But again, to continue my international banking background, I was after a few years was contacted by the largest investment manager in South Korea, known as McLarty Securities, to build out their new American investment banking platform, which was again largely focused in real estate. This time, we were focused primarily in hospitality lending and investment. This was around 2018, sorry. And I was there for a couple of years. And then what I'm sure you can imagine happened with COVID. That was not too kind to the hospitality world. And so we saw our CEO, our CFO, and a few other managing directors were asked to leave, which was very unfortunate. But I guess a necessary symptom to what was going on in the world. Certainly, being in a place like Southern California, where we did have some exposure, the prolonged shutdowns were not helpful to the investments in those particular regions of the country. And so, after about a year or so of that, I found my way to FNRP, where at FNRP I pull, and we can certainly go back and touch on any one of those particular stops along the way. I pull from all of those, I guess, from all of those experiences and relationships that I was able to grow or develop rather, into originating the loans, and really kind of fleshing out the needs throughout our capital stack on individual investments from people, investors, lenders, whoever it might be that I've interacted or crossed paths with in the last few years. And so it's one of those things you look back and you think, well, okay, so I was at this small bank in Louisiana, and then I was at the biggest bank, right, in Louisiana, and then I'm with Bank of China, and then I'm with IDB, and then I'm with McLarty Securities, and you're starting to think like, okay, could I have spent a little more time at a couple of these shops? Sure. I'm not an advocate for hopping around. Not that that's what I was doing. I mean, every move had a rationale behind it, at least in my mind. But now, when you look and see where you are now at FNRP, and you're pulling from every single one of those stops, it almost you look back and you think, okay, was there something here that I'm missing? Because it almost feels like if I hadn't had those stops, I wouldn't be more success. I wouldn't be as successful as I am here today at FNRP, uh, because we do play in the smaller markets. We play in the larger markets. We do small loans. We do big loans. We have, investors that
Mm-hmm.
have small needs. We have investors that need, larger, more sophisticated executions. You're talking to folks that are in smaller submarkets. We're doing a deal right now in Lake Charles, Louisiana. Like, what
You've
are
been
the
there.
what
You
are the
know all about
chances,
that,
right? I mean, like,
right?
I know that submarket. I know what it's all about. I know its struggles, right? We do deals. We've done 4 deals, now in Birmingham, Alabama. Um, we're doing deals in New York and Chicago. Places where I've lived. Where again, you look back and it's like, man, none of that really made sense. I mean, it was all doing kind of the same thing. I've always been a front office kind of originator, type. That's always been my focus. But all the different markets, growing up in the South, and ultimately landing where I am now, it is kind of interesting because I don't know if I would have had the success that I've had now at FNRP without those previous interactions and experiences. And that's where, again, I wouldn't necessarily, I would not say to anyone like this is a roadmap you should follow, like, at all.
Yep.
Um, but it is kind of, I guess, rewarding in a strange way, where some of those decisions that I made and places we've lived and places I've worked, it really does kind of come together, and it's a nice little fit.
Man, what a story. That's awesome. The good Lord works in mysterious ways, you know?
It's true. It's true because and I will say I've never been more, I guess, uh, comfortable, or not, maybe not comfortable, but I've never been more satisfied in kind of what I do on a day to day basis than I am now, right? And I'm not just saying this because my principals are listening to this. I literally mean, like, on a day to day basis, it's a very difficult, very rewarding, very, but at the same time, like, you fit here, like, this works, like, you have the skills, you have certainly the experience to kind of wade through the day to day issues here, and I've never really had that
Hmm.
confidence in another role, and so yeah, I agree, Drew, 1,000%.
That's awesome. I think that's just part of us kind of coming into our career too. I mean, like you have a decade and a half of experience. Like that's a long time to be doing the same thing around the same discipline, you know?
Yeah, it is. And it hasn't been that easy, right? When we got out of college, even though you're not in the, quote unquote, the finance world, I mean, you are, but I mean, like, as far as like the data, like on the banking and finance side, I mean, we graduated during the worst financial meltdown, right? In recent
Right.
memory, right? We're experiencing inflation now, the highest it's been in 40 years. And in between, we had COVID and some other, typical market undulations. So it's not like things were just like on a platter when we got out. I think a lot of that, I think we're very lucky that we had to figure some of this out. You know, I,
Absolutely.
when I graduated, there wasn't a million, banking and finance jobs out there for me to get into. I mean, I dabbled in insurance, which was basically a fake job. I mean, it wasn't a career; it was a job. And kind of waited, bided my time, thankfully, until I, like I said, landed with Citizens. But um, it's been tough out there, and I think that resilience is something that shouldn't be overlooked.
This show is brought to you by Pearson Partners, helping families create wealth through self storage. Self storage provides capital preservation, monthly income, and can lower your taxes. We have a team with over 60 years of self storage experience, and we can help you. To find out more, go to our website, Pearson Partners PE, sign up for our newsletter, or listen to other of our podcasts. It's important for me that you understand how we think and view the world, and this is a great place to start. Thanks so much for listening. Let's get back to the show. Absolutely. All right. So you mentioned a couple of times about goal setting. And so I'm curious, are these kind of like just goals you've had in your mind? Do you physically write down goals? Do you reevaluate your goals? Like, how does Jack think about goals?
I'm not going to be prophetic here, or I'm not going to be like I'm some spiritual speak it into existence, even though I do live in LA. I'm not like rubbing crystals over here, but and I will write down I have my to-do lists, or there's to-do lists all over my house, but in my mind, I think it's more about conceptualizing. Look, find someone that you look up to, find someone that you think is, maybe professionally, not personally, but professionally, is doing the right things to get where you think you should be or want to be, and
Mm-hmm.
finding out by, frankly, just going up to them and trying to have as many conversations as you possibly can to understand, how did you get here? What did you do? And for me, it was always, I want to get into investment banking, private equity, institutional real estate. Like, that was what I wanted to do. I found out very quickly when I had a few of those initial conversations, you're not ready. Not only you're not ready, you don't really have the background, you don't really have the connections. It's going to be a slog. Can you figure it out? Yeah. But you're not just going to be able to show up with a resume and like, here's a job. That's just not going to
Yeah.
happen. Um, but at least I knew what it was going to take. I knew it was going to be hard. I knew it was going to take some time. You hear no much more than you hear yes, which again, I think on the front end, that's a very healthy, wanting something that a lot of people want or wanting something that's very difficult. I think that's a very healthy thing to strive for because nothing is more character building than getting your butt kicked on a daily basis by someone saying no, maybe get laughed in your face a little bit. Um,
Amen.
I, I think I went through years of that, right? Like I didn't just land at Bank of China. I didn't just land at JP Morgan. Like, yes, I had some good or some lucky, uh, I guess, deals fall my way or may have crossed paths with the right people. But, certainly starting with the Bank of China's of the world, like I probably heard 600 no's, and I'm not exaggerating, leading
Wow.
out to Bank of China. I mean, if there was a job that I was remotely interested in, I either would reach out to the recruiters or, reach out to friends of friends or just trying to get as much of a leg up as I possibly can to get information about, okay, well, if I'm not a fit, what do I need to do? Right? Do I need to take a class? Do I
Mm-hmm.
need to go to school and do I need to get another graduate degree or like whatever it is, tell me why I'm not good enough. And it was just persistence, right? And squeaky wheel gets the grease. And you know, funny enough, on the Bank of China deal, they actually found me out of the blue. But again, I think it's a numbers game when it's at a certain level. Certainly as it comes to hiring practices, and at the end of the day, I think being able to have conversations with people and get a level set expectations about what are you going to need to actually do to get what you want, and then making that the goal. If it means you need to move to Chicago to be close so you can go have coffee with somebody, then move to Chicago, right? Or New York or
Mm-hmm.
wherever you want to live. You got to be there to play. It felt like on
Yep.
the front end. If there's an event that you can go to it, right? Nobody's going to find you sitting in your apartment by yourself all afternoon. I mean, you can call folks all day and write emails, but unless you're getting out there, you really can't have high expectations. I'm also not a big fan of just spinning your wheels, right? I mean, not all activities, efficient activity, but I feel like I hope I'm answering your question. I mean, it was really,
No, absolutely.
I do set goals, but it was more about like, okay, if I want to get to this particular point, I need to actually work at it. I can't just, have it on a bulletin board and say, okay, I'm going to get there. You really have to work at it on a daily basis and never be satisfied, right? When I got to Bank of China, you know, after a little while, I didn't want to leave, but it was more so, okay, well, I did this, right? What can I do to better myself, better my career? Is it doing more sophisticated deals? Is it being more senior somewhere? Is it, whatever it might be, to constantly improving, constantly trying to better myself, never being satisfied, which is probably a blessing and a curse at the same time, if we're being honest. But again, it's led me to where I am today, and you know, I'm finally starting to see the fruits of a lot of those labors, but it was not easy, and a lot of it was not very fun. But you look back on it and think, okay, it was worth it.
That's cool, man. One of the things I've been thinking more and more about is really relationships, and how important it is. And that's part of why I'm doing the podcast is I get to kind of, chat with great folks like yourself. But we've put much more emphasis on, like never eating lunch alone, like actually going and having FaceTime with as many folks as we can, as many folks as I can. How do you think about relationships, especially kind of as you've had these different stops across the country? Do you think about that at all? Maybe that's staying in touch with folks or building new relationships.
Yeah, it's a good question, Drew. It's hard, certainly in this post-COVID or whatever you want to call this world that we live in now. I think a lot of the relationships that were maybe stronger than they were prior, it's harder to pin people down, and I think it's easier. People have gotten used to phone calls and emails and just a little less touchy, if you or not touchy, but a little informal or more less in person.
Yeah.
And I think that's tough. I'm a Southerner through and through. I want to go see you. I want to go to lunch. It's been hard, certainly in my space, doing that as much as I'd like to do. do it. Life gets busy as well. You got kids and other things running around. So, you know, I probably should go see my lenders a lot more than I do. But to answer your question, you know, I really do. And look, not everybody's going to love you. That's another. Like, I'm an only child. It's hard for me to admit. Not everybody loves me. Um, but to the extent that I can control, a handful of folks, one thing we talk about at FNRP and my platform, is look, every lender we work with, we probably won't work with again, for whatever reason, but we're kind of wasting everyone's time if we're not at least executing with these folks at least two or three more times. And it doesn't really go through it. There is a headache always when you're bringing on a new lending or investing relationship where you're having to go through and negotiate things, get to know each other, do the whole, you know, intros and the things that go along with getting to know anybody. But if you're not, from a business standpoint, if you're not utilizing and pulling off of efforts that you've put out there, on a recurring basis, then you're really just wasting everyone's time. Because especially in my world, we have these very complicated deals. The retail world has gotten much better, and it's something we can touch on in a minute. But the retail world is not what it was. When I got into banking, it is a much more institutional asset class. Certainly, the grocery anchored space, which is where I play. But retail is still a difficult asset class for a lot of lenders, just historically, to get their arms around. And again, if I don't have a good relationship with those lenders, they're more likely to not share with me, like, hey, Jack, like when we're going out to find a new deal, we probably wouldn't, lend on that. Or if we did, this is where we would be. And I think that's really the difference than like your traditional loan brokers, like at the JLLs and CBREs of the world, which, by the way, I'm not trying to put them down at all. They do billions and billions of dollars a year in originations. They clearly have a firm hold on their purview, or their industry rather. But my approach is a little bit more truncated in that I want to have a good relationship with a handful of lenders that are going to give me the information that they typically won't give a broker. Because with me, I want to understand, right? Like that my relationship is like, Drew, you're my lender, tell me what your investment committee is telling you, or your credit committee is telling you. Like, okay, back in January, you were doing power centers and all these crazy tertiary submarkets, and you were going 70% LTV. Well, now, in September, October, now you're not looking at any power centers. You're only looking at like triple net grocers and like top 50 MSAs, or like your entire lending criteria has changed. And yes, lenders will, that's me knowing what one lender will do is not necessarily a competitive advantage. I mean, they'll tell anybody, but knowing what they like on a revolving basis, and not just showing crap into these lenders when they're already stressed because of whatever the rising rate environment's going on, or maybe they're really busy like they were earlier this year. It's that mutual respect of, that's always been my approach, and having a good understanding of what these lenders are looking for. Because I want to call them up and say, hey, look, I'm going to go to 5 or 10 lenders, as opposed to just shooting out 100 emails to folks that I know immediately, because I have a good knowledge of their criteria, that they won't even look at this deal. So why waste their time with a 120-page OM and all these models that, again, just going to clog their inbox. And so time is everything with me. And again, if I can get somebody information and have that, or excuse me, if I can have a relationship with someone where they can immediately say, like, this is going to be for us, or it's not going to be for us, or I know that it's going to be for them, and I can get a dialogue started sooner than later. That's really what's a benefit to me. But also, I think it really starts at that core. It's just a mutual respect and understanding, with someone. And we do have, if any of our lenders ever hear this, we have about 10 or 15 that we routinely execute with. And I tell them all the time, the lowest rate's not always going to win. Are you
Absolutely.
are you decent human being to work with? Are you reasonable? Are you going to do what you say what you're going to do, and not retrade me, and all these things that I've experienced throughout my career? That is worth 50 bips, 25. I mean, I can't tell you how many times we've executed in the last year, with lenders that we know are going to be there, right? And it
Mm-hmm.
starts on respect.
You're touching on a really great topic here. I've been learning to speak bank for 2 years. Like, I've been a real estate broker for 10 years. I thought I understood investments and like what banks need. Come to find out, I don't know anything about what banks really care about. But I'm learning. What advice would you give to folks who don't have a mortgage banker in their back pocket, but they're going to talk to banks individually to try to find out some of the information? Maybe they have a relationship or two, but they want to deepen that relationship. Um, Maybe what advice would you give there?
Well, call me for first off.
Okay, these are baby. These are like $5 million deals. All right,
Nothing's
these
too
are way
small.
too small
Nothing's too
for you.
small. Nothing's too small.
All
Nothing's too
right.
small. It's a good question. I mean, I think generally financial literacy is a problem kind of nationwide, not just in like your traditional, you know, commercial real estate transactions. I think we could all be better, starting at a young age, kind of understanding the lingo, even at a high level. Um, but it really, I don't know if there's really an avenue for one to proceed through without having some sort of a relationship with a lender that you trust already. You know, that's why, and you go to every small town. I'm sure there's a group of folks that can point you in the direction of somebody that is a friendly person that's willing to take your phone call and help educate you, because I think all lenders, especially in these this current economy that we find ourselves in, should be almost a teacher as well as a lender, because it's good, and I have to do this with, I mean, that's part of what I do for my own firm is I get beaten up all day by lenders, and I have to explain to our acquisitions guys, first off, this isn't me. Like, I want a 2% rate, right? I mean,
Yeah.
nobody's trying to,
Yeah.
execute at 6%, but it's a constant struggle of making sure my firm is up to date with not just trends, but real data that is changing on the hour sometimes. I mean, the volatility's been wild, but unfortunately, there's not a lot of, aside from Googling, right, going on Investopedia and Googling a word. There's really not a lot of avenues out there for most folks to kind of coach themselves up, unless you kind of know what to look for. If you've heard of, certain, you can kind of go through a rabbit hole if you've got a handful of buzzwords that you've heard recently in a conversation that you can Google. But, you know, and that's kind of my approach on this when I'm working with folks that are, certainly on the debt side of like, hey, this is what this is. That's kind of part of the service, right, that you get when you work with a mortgage broker, even though that's not really what I do. But to put it, plainly, that is, a part of the service that they're supposed to kind of coach you through. But I would really, not that everybody has this opportunity, but I think anytime you can, leverage a conversation with someone that's local, that can be helpful. And hopefully you've got a lender like the Citizens Banks of the worlds that are willing to have meetings with you.
Yeah, that's great advice. I mean, there is always a small local bank. Maybe it's even a credit union who you can go and have a cup of coffee and say, "Hey, listen, I'm thinking about buying my first Airbnb. What would check your boxes? Would this even check your box? What do I need to do financially to put my house in order to be a credit worthy borrower?"
That's exactly right. And again, those banks you'll probably be able to find fairly easily because they're going to be known, right? There's banks in every small town, not just the South, in every state in the union, that have a bank or two that everybody knows, like, oh, you can go call, so and so, and he'll walk you through it or whatever it might be, because that's why those community banks are there. They serve a purpose to serve that local area. And not everybody's supposed to know, when you're going to buy a property, especially if it's your first, that you might have to sign some recourse. You might have, you need to submit a financial statement, a couple of years tax returns, and blah 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 blah. All those things that we have to, we can't get loans on character anymore, so we have to submit a whole lot of information and do a deep dive and pull credit and all that fun stuff. So yeah, I would start there, and frankly, if it's someone that's using or going for their first loan request, they probably need the benefit, or they need the services of that small bank. So it should be
Yeah,
that should be a good
absolutely.
avenue.
I would really appreciate it if you'd leave us a review on Spotify, Apple, or anywhere you're listening or watching to this show. Thanks so much for joining us on this audio adventure. Let's go have some fun.